All right, so today we're going to be talking about how to create a kick-ass investor packet. I know, sorry, but it's true. You want to know how to create a kick-ass investor packet? Welcome. That's what we're going to talk about today. All right, so let's start with some foundation. So where in our four-step investing process does it fall? So if you've been on our cash flow training, then you've been through what our four main steps are. The reality is there's like 150,000 steps in investing, right? But when you're new and you're trying to line everything up and put it all together, it can feel really overwhelming. So Jen and I have basically taken our entire process and broken it down into four separate and distinct steps that allow you to be able to wrap your mind around each section. So if you haven't taken that cash flow class, you for sure want to do that because that's what the foundation of this part is. So we have select, investigate, close, and manage. So the investor packet falls in the actually kind of falls a little bit in two categories of our four-step process. It falls into the investigate and the close step. So investigate part of the process is when you're doing your due diligence and you're getting all the information, you're lining up your funding, and the closing is in between that due diligence and the time you close. So the investor packet sometimes comes when you're in the investigate part of lining up the funding and pulling everything together, and sometimes in close. So it kind of goes over both of them. All right, so there's three other trainings that if you haven't seen yet, at the end of this training, I will show you how that you can get them. They'll all be free for you, but I'm assuming when you're coming in here that you already have a certain amount of knowledge. So if you don't, it's fine. Just stay here, you absorb what you can. Then I want you to go watch those other trainings and then come back and watch this. It'll be a lot more meaningful because you'll understand like how everything fits together. So those trainings are the 4 steps of cash flow, which is like our baseline, like laying the foundation of our whole process, the BRRRR strategy, so buy, renovate, rent, and refinance, and then our remote investing class. All right, so like I said, at the end, I'll give you a way that you can send us a message to get links to those if you haven't seen them yet. All right, so what is an investor packet? So an investor packet is simply a document that conveys certain information to somebody. All right, so it depends on who that somebody is, what information is going to be in the investor packet. But the stuff that's typical in an investor packet would be information about the property. What is the opportunity? Pictures of the property, financials or financial projections, and sometimes due diligence information. So when I say opportunity, what I mean is it depends on like what are you doing the investor packet for? Who is the intended audience for it? All right, so it might be that you're looking to raise private funds for a deal, right? Maybe you're looking for someone to put up a down payment. And we'll talk a little bit about SEC compliance there in a minute. It also might be that you're putting together the packet for potential like hard money lenders or lenders. And when you do that, it makes it look like you've been doing real estate for a long time because most new people would in a million years never know to put together a presentation like the one I'm going to show you how to do. And it's not difficult. It's just that you just don't know. And you can't present something you have no idea you're supposed to do it. So anyway, so even if it's a conventional lender, putting together the investor packet, just it makes you look seasoned. It makes you look like you're a professional. You know what you're doing. You could do an investor packet for the purpose of doing wholesale. So if you have a deal and you're planning on wholesaling it to someone else, the investor packet is a condensed version of all the information so that somebody can look at it and go, oh yeah, I'm interested, or that's not really a fit for me. So it's a great way to convey information for wholesale. And it's also a great way to communicate information for a potential partner on a deal. So let's talk a little bit about SEC compliance. So depending on what you've learned so far, if you've been in other programs or just been learning real estate, you might have heard of syndications before. And one of the things that Jennifer and I focus on as far as educating you guys is how to do real estate transactions without syndication. Not that there's anything wrong with doing a syndication. It's perfectly fine, and it's something that you probably will eventually do. But what we find is that a lot of people who are new to real estate, if they don't have funds of their own or several $100,000 to put on a deal, if it's a big deal, they automatically will go to syndication because it's a way of raising funds legally. The problem is if you're brand new in real estate, everything that goes into syndication is so complex and so difficult if you're new that you really end up not ever doing deals. And if there's one thing that we're about is about people in our program getting results, taking action, making moves. And so what we find is if you put syndication as the first thing someone has to overcome, they never actually get started. So we don't teach it. So what we do is try to teach you ways to do real estate without syndication, but legally within SEC compliance so that you can actually do the stuff we're teaching. So when it comes to raising funds, when you're putting together a deal, if you don't have the funds for the deal, you need to bring somebody else in. The main thing that's going to differentiate is if you're basically doing the deal and you have passive investors, meaning all they do is put up money and you handle everything else. That is something that would require syndication because they have no active role. So how we differentiate, and we did a training on this, I think about a month and a half ago. But how we differentiate is if we're going to have a project, what we're looking for is a couple of partners or a partner or a couple of joint venture partners. All right. And if we're looking for joint venture partners, each partner is going to have some active role, even if it's small. Okay. So just know when I say raising private funds, that might be your intent. Your intent is to raise money for a deal. But the way that I'm going to teach you to structure it, if you're on the newer side of things, is going to be through doing a joint venture as opposed to doing a syndication, just because the complexity is infinitely smaller and much more doable so that you can actually get into action. And then eventually syndication will be no big deal because you'll already know the rest of it. All right, so the investor packet is a way to communicate information. Now, one of the things that's really, really critical is that the only time you would ever send somebody an investor packet, if it was for the purpose of raising funds or bringing on partners in a deal, you would only do that if you already had a pre-existing relationship with them. Now, that's a little squishy and that can be somewhat subjective. Like, what does that mean, pre-existing relationship? What it means is you wouldn't want to go on to, general Facebook and be like, oh, who's interested in my deal? And just send them your investor packet because that could be in violation of the SEC rule about having a pre-existing relationship. You at least want to get on the phone with them, have some communication, document your communication so that you can then send your investor packet over because you already have a relationship with them. Okay, so that's why it's always good. And we did a training on raising private funds. We talk about how to build those relationships, even through social media, ahead of time, so that when you do have a deal, you have a whole bunch of people that you can already reach out to that you've already been establishing relationships with. Anyway, so the investor packet's it's an absolute critical document for so many different things. All right, so let's jump a little bit further into it. So how to put one together. So there's a number of different ways to do it, and I'm not going to be overly prescriptive. I'm going to show you a sample of one that I put together for our mastermind group. That's just in Microsoft Word. So you could do it in simple Microsoft Word. You could do it in Google Slides. If you have knowledge on other programs, it doesn't matter like what the actual format is, as long as when you send it to someone, it's in a way that they can open it and they can review it easily. So depending on what your technical skills are, that might drive which platform you decide to use on it. But these are some of the elements of what would be in it. So you're going to have a cover page, and I will give you visuals for all of this in just a couple of minutes. So you're going to have a cover page. A cover page is going to have photograph of the property. It's going to have the address, like what is the opportunity at the top, and then your company's contact information. And if you don't have an LLC or a company yet, then you just put your contact information. It's going to have on the next page an executive summary. The executive summary is a single page snapshot of same thing, like what is the opportunity? What do some of the numbers look like? What is the current condition of the property? What are you looking to do with it? What is the ARV? So I'll show you an example of one for the BRRRR strategy that you could model after. But the executive summary is intended to have kind of everything about the property, but in summary form in little paragraphs so that someone who's interested could read it and not have to really get past page 2 before they know whether they're interested in going further or not. So if you do a good executive summary, someone isn't having to fish through 20 pages of information to get the gist of the project. All right, another thing you're going to have in there is property pictures. So depending on what kind of deal it is, if it's a fixer-upper, then you're going to have pictures of the fixer-upper pictures so that the person looking at the deal gets, oh, okay, got it. It's going to be a rehab project. All right, and if it looks like it's in great shape already, then you'll have pictures of the property that's already in great shape. It's just a visual representation. People like visuals of what it is that you're doing. Rehab budget, so if applicable, if you're doing a rehab, you're going to include the rehab budget. Financial projections. And the financial projections, again, depending on whether you're buying it as an already existing cash flow property or doing the BRRRR strategy, or if it's an apartment building or apartment building value add, you might have two different sets of financial projections. So in the example I'm going to show you, it's for the BRRRR strategy. So it shows, here's the initial financial projections of what it's going to look like to just close on the property. Here's how much money that we need to close. Here's the closing costs, insurance, taxes, hard money lender fees, etc. And then a separate set of financials for, this is what it's going to look like after we refinance. Okay, so depending on what you're trying to do with it, you want to let that end user be able to see what your intention was. If you were putting together an investor packet for the refinance of the property, then you wouldn't include all the rehab information in there for the bank, because it wouldn't be relevant anymore at that point. But if it was earlier, before you bought the original or bought the property to begin with, then you would include all of that, because the hard money lender is going to need to see, what are you buying it at? What is your plan? And is it going to make sense when you go to refinance? Particularly if you're using a lender that does both of those loans under one roof. Another thing that is common to see is sold comps. And sold comps is short for comparable sales, but sold comps are used to establish the after rehab value. So when you're doing any kind of value add or the BRRRR strategy, your end game is going to be based on being able to refinance or sell the property. So whatever the end strategy is, so you're going to use sold comps for anything that's under 4 units to show, okay, so at the end of this project, the ARV, after rehab value, will be whatever it is, $200,000. And maybe you're getting a loan for 70% of that. So you use sold comps to establish what the value of the property will be once you're done renovating it and making it nice and getting it filled with tenants. Another thing that you put in an investor packet like that would be rental comps. So especially if it's vacant, and even if the property is not vacant, like we have several people in our mastermind right now that are going after properties that are already occupied, but they're under market because the current owners own them for a really long time. They haven't raised rents. And so there's an opportunity there. Just yesterday on our mastermind call, Joni was talking about a 9-unit property that she's buying it's already performing. There's people in there, but the rents are like $850 to $900 a month, and the market rents are $1,200 a month. So it's not a value add project in that she needs to go renovate, but she does need to start raising the rents to get them up to market value. So if she was looking to present information to a lender or a partner or anything like that, she could use rental comps to establish and show, hey, look, the property is performing at this, so it still works for the loan, but this is what it should be performing at, and this is what my plan is. This is what I'm going to do over the next, whatever, 12 months. I'm going to get all the rents up to $1,200 a month market value, and here are the rental comps to show that other properties in this area that are similar size, square footage, year built, layout, bedrooms, bathrooms, everything, that those are going for $1,200, because it just helps to substantiate the claim that she's making that, hey, there's this great opportunity. Okay, so we want to show rental comps, and I'll show you again what that looks like. And Jennifer and I really like to use Rentometer for that. And it looks like Rent-O-Meter. Maybe we say Rent-O-Meter, but rentometer.com. All right, and then the other thing that could be in there is other due diligence or power team information, and I'll give you kind of an idea of what that looks like. All right, so I think we already talked about this. So the sample IP or investor packet I'm going to go through with you is one that I created for the BRRRR strategy, which could be used for private money loan for the gap funds. So the gap funds means whatever money you're going to need to do the deal, the down payment to the hard money lender, the holding costs, closing costs, reserves, all of that, you might need to have a certain amount of money. You may or may not have that. If you don't, you're either going to partner with someone who does, or you might need to borrow those funds. So you could put together an investor packet in order to borrow the funds. You could use it for your hard money lender. You could use it if you're wholesaling. So the people in our wholesale program are oftentimes wholesaling properties that are perfect for the BRRRR strategy. Who are they wholesaling them to? Other people in the mastermind who are looking to do the BRRRR strategy. So putting together the investor packet so the ultimate buyer of the deal can see what the opportunity is there and decide if they want it. And if so, then they would pay the wholesaler their fee in order to take over the deal. All right, and then info for a prospective partner. All right, so let's go through a sample investor packet. So what I did is I just took, so like I said, this is a Word document. It's maybe I don't remember, 7 or 8 pages long. And I just took screenshots so that you can get a visual for what this looks like. And then for those of you who are on this webinar who are already in the mastermind, I already know the questions are coming. Yes, you have access to this. So if you're in our mastermind program, you do have access to this. It's in your wholesale course. Anyway, and at some point I'll bring it into the passive income course too, the same training, so you don't have to go to 2 different courses, but this document is in there for you guys. So for everyone else that's not in here, you don't have access to the actual Word document, but you could look at this and create something similar for yourself. Okay, so in this particular case, we're doing, this is a sample investor packet of wholesaling a BRRRR opportunity property. So you see at the very top where it says wholesale opportunity, buy, renovate, rent, refinance. So that tells whoever's reading the investor packet, oh, okay, that's what this is about, as opposed to looking for a partner for BRRR, or looking for a partner for stabilized rental. So whatever it is, quick snapshot, property address, picture, like cover picture, and then presented by, and that would be your company information, address, email, phone number, etc. Right? So that's the cover page. The next page, this is one that's just super critical, super important that you nail it. All right, so the very top it starts with, this is a wholesale opportunity to purchase a duplex fixer-upper, complete renovations, rent, and refinance into long-term conventional financing. So the thing I want you to keep in mind when you're creating an investor packet, you don't want to just go in and literally write the same words that I've written, because what I'm writing is specific to that deal. You just have to step back sometimes, not stress out too much, and just think, what do I need to write? Just communicate to someone what this deal is about. All right. Then we have project details. So we have the purchase price, rehab, wholesale fee, closing date. Depending on what the deal is, that information might be different, but you're just looking for like the highlight project details. Next is property information. So this is where you're going to get into the address, like what type of property is, bedrooms, bathrooms, size, year built, and any other useful information. So for this specific property, I wrote, the backyard has a privacy fence separating each unit, providing tenants with separate backyard space. The reason that's relevant is because the person who would ultimately buy this property would see this and go, okay, that's a benefit, because if there's 2 people living on one property, which is the case if you have a duplex, if they have a shared backyard, that can be a little bit, awkward. And so if they have a separated backyard because there's a fence, a privacy fence that separates it, they can, as long as the landlord allows it, they can have a pet that goes out. They don't have to worry about it bothering someone. They don't have to worry about someone's kids going in their side of the yard, etc. So if there's something about the property that's worth stating, this is a great place to put it. What else was there? Oh, this property is on the outskirts of a highly desirable area of Indianapolis called Fountain Square, an area that has seen significant growth and appreciation over the past several years. As a result, the area has become more highly sought after by renters, driving the market rents up. And I put see historical trend line below. Now, this actually is not a property that we really did wholesale, but it was a good way, because it had a lot of stuff in it to show different examples. So it's very rare that I've ever put a historical rental trend line in an investor packet, but in this particular case, it really does show, if I was wholesaling it to someone, like, look, this area has been going up. Look, rents have been going up. And if I could get a snapshot of that, I got this from Rentometer, I'm just going to paste it here because it helps make the case. All right, so there's no rules as to what has to be here. It's about what you want to convey. All right, next you get into property condition and income. So in this case, the property is a fixer-upper in need of a new roof, minor front landscaping and fence repair, interior and exterior paint, new flooring, and updates in the kitchens and bathrooms. Estimated rehab costs are $33,000 and change. Once renovated, the projected conservative after rehab value is $135,000. So you're just giving the user specific data that's useful. Okay, this is how much the rehab is. This is how much the after rehab value is expected to be. Based on research of comparable properties in the area, the property's market rent could be as high as $900 per month. See rental comps later in this report. However, to be conservative, financial projections include monthly rents of $825 a unit. So you're telling them, look, you might be able to get as much as $900 and the comps support it, but we're running our numbers at $825 to be conservative. So that's just something that if you feel that's relevant based on what you're seeing, then do that. But if everything you're showing is $900 and you're comfortable running those numbers at that and presenting it that way, go ahead and do that. You don't have to do the conservative thing, but with this property, I did because I felt like it's a pretty big jump compared to what the current rents were, before buying the property. All right, and then closing date, financing options include cash, self-directed IRA, or private and hard money. All right, and the reason I said that is because I don't want someone thinking they can just go to Wells Fargo and go get a loan on this property, because Wells Fargo will not fund a property that's a fixer-upper. All right, let's go to the next one. Okay, so the next we have property pictures. So, you pick 6 pictures that are a reasonable representation of what the inside of the property looks like. And again, if it's a nice property that's not a fixer-upper, then you would write things that are in line with that. You would show pictures that indicate that it's in good condition. All right, and then if you're rehabbing, you'd have a rehab summary that totals. Always make sure your rehab summary totals to what you're putting on the first page. And if you're not super detail-oriented, you want to make sure that you have somebody else look at this document before you send it out, because if you're ever sending a deal like this to someone like me, who I see like little details like that, and I see that the numbers don't match, it immediately has you lose credibility, because I'm like, well, I don't even know which one's right. The executive summary says one thing, the rehab summary says something else. Like, I don't know if this person knows what they're doing. So don't be in a rush to get this out the door before you've had somebody else take a look at it. Even if you are detail oriented, sometimes it's really hard because you get lost in the weeds when you're doing it yourself. So just make sure someone reviews it and just kind of double checks all the information throughout the document to make sure it's consistent. Another thing that happens sometimes, just a reality of our business, is you might project what you think the rehab is, but then you have a contractor go out there, you have a couple contractors, and so your rehab numbers kind of moving, and maybe you already started your investor packet. So you just want to make sure that at the time you send it out, everything is at the same moment in time, because what if your detailed one says 33,000, but then your summary says 38,000, and then the user's looking at it going, well, I mean, which is it? So, which doesn't look great. It's not the end of the world. Like, though, it's not the end of the world that happens, but it's ideal if you have everything matching so that they have confidence, in the investor packet information that comes out. All right, then you're going to have some financial statements. And this is really going to depend on what you're trying to do, what the strategy is with the property. So in this particular case, the way I did this was I was showing, here's the initial purchase and rehab. This is what it looks like for us to buy it and close on it. And at the very top, I put, like, here are the assumptions. Hard money financing, 85% of the purchase and rehab. 3 months holding period prior to refinance. 3 points, 12% interest, 1,500 lender fees, just so that the user knows, because the user doesn't have access to the calculations I did. So rather than them having to figure out, well, what is this based on? How much is the loan supposed to be? If you just write the assumptions, that will help them to, understand what you're putting together and what you're presenting to them. All right, so that's one part of financials that I'll present, is what does the purchase look like? And if you're just buying something that's just performing, then you really only need one set of financials. There's only 2 here because there's 2 steps in this process. All right, and then we also have financial projections for what it's going to look like after we refinance. So same thing, what does the assumptions include? Refinance at 70% of the improved value. Financing is 2 points, 5% interest. So whatever it is, and I'm not saying you need to put these numbers. In fact, the numbers I want you to use are whatever the numbers are for the deal. You use actual real numbers and just show someone this is what the financials look like. And again, for those of you who are in the mastermind, these screenshots are just coming out of the calculators that you have in the course. So that's where this information is coming from. If you guys are not in the mastermind, you have to, obviously you're going to have to do the calculations on your own, and especially if you're good at Excel, you can absolutely do that. Just make sure when you present it in the investor packet that it just looks clean and concise, and that it's easy for a user to follow. Okay, next is going to be sold comps. And remember, sold comps are used to establish the after rehab value. And if you're flipping a property, the after rehab value is what you're going to be selling it for. If you're doing the BRRRR strategy, the after rehab value is what your refinance is going to be based on. So if you're refinancing at 70%, 70% of what? Of what is what you're looking to establish by looking at what else has sold. And when it comes to comps are things like distance from the property. So you want stuff that's geographically close to the property, similar year built. Like I'm not going to compare a 1910 duplex to a, you know, a 1990 duplex because, well, probably the neighborhoods are going to be completely different, but the properties are just different age. So you want to find stuff that's relatively, you know, in the same genre as far as timing, similar size, and then we want similar bedrooms and bathrooms. So when you're looking at different comps, you're doing your best to look at all of the different things that have sold around to say, or sold around the area to say these one or two or three properties are the closest representation to what we're going to put back on the market. And because I'm putting a X square foot year built bedrooms, bath, renovated property for rent, and here's the same property practically that just sold 3 months ago for this amount, I'm going to use that amount as my after rehab value for the purpose of doing my projections. Now, the reality is when you get into like something like a BRRRR strategy, when the time comes for you to refinance, the new lender is going to send out an appraiser, and the new appraiser will come up with an appraised value. They may or may not come up with the same one that you had. So you want to be conservative when you're projecting your ARV, because if you think I could get 150 and they only appraise it for 130, I mean, the thing is, it's a buy and hold anyway, so it doesn't like impact you from a long-term thing, but what that does impact is the amount of money that you would be able to get back from your refinance. Because with the BRRRR strategy, for many people, the idea is buy it, renovate it, rent it, refinance, and pull your money back out that you used to fund it initially so that you could go do another one. All right, so you want to have a good, your arms around what the ARV is, mostly because it's going to impact how much capital you're going to need or you're going to have to leave in the property. Okay, then we get to rental comps. So I talked about Rentometer. Now, if you are actively buying real estate, then I highly recommend that you make the very small investment. It's like $100. Sometimes they have specials, you can get it for $50, but it's a tiny speck of an investment in this website that gives you like full-on rental comps. And I'll show you on the next page because it really gets into detail. But this is what Rentometer looks like. So the very top of it shows the area. So you put in the property address and you put in the bathrooms, what the rent is, and it'll show you like what is in the area for rent. And then what I did is I zoomed in just so you could see it closer, and I looked at each of the comps and I circled the ones that were the most relevant. Now, where did I get that information from? When you have the pro version of Rentometer, which is the one I'm saying is $100 or $50, get it on special. You get like a certain number of reports, and when you pull it, this is what the information is in there. So you have the distance from the property, the rent, the size, the square footage, or size is the square footage, the bedrooms and bathrooms, and what type of property is, and when was it listed. So you get a lot of detailed information, and that's why to me it's totally worth it. If you're buying, if you're just like in the I'm just kind of getting to know real estate a little bit phase, you don't need to make that investment yet. But when you get to the point where you're like, okay, it's time. It's a small investment compared to the real estate you're buying. So don't nickel and dime yourself and shortchange yourself on the information that's out there for super cheap. It's a really good investment to make. So I'd highly recommend it. All right. And then some other information that could be on the investor packet would be, could be either due diligence information or it could be power team information. So in this particular case, this is an example. So under contractors, I wrote renovation costs were estimated based on a bid received from a licensed general contractor. Contact information is available upon request. I don't put my team members' information into the investor packet I'm sending out to a whole bunch of people because I'm not looking for people to circumvent me to get my team. But I do let them know, like, hey, if you're interested in this deal, I will give you the contact information, but it would be related to this deal. But I'm not just going to put it on there so that everybody sees like who I'm using. And I don't mind making a referral once in a while, but I also want to create some kind of barrier to entry so that if I'm wholesaling it, there's more of a benefit by going through me because I've established my team and I'm willing to give it to them if they're doing the deal with me. Property management. There are 3 property management companies near the property. Average cost is 10% of collected rents with a placement fee of 50% of the first month's rent. Contact information is available upon request. So the information there is just going to be based on what your own research was. So in this particular case, based on my research and calling property managers, there were 3 in the area, and those were the averages in that area. All right, lenders. Lender or buyer may finance the property in any way they see fit. We have contacts with both local and national lenders. If considering the purchase with retirement funds, we also have a lender who will provide non-recourse lending to a self-directed IRA and an IRA custodian if you need to transfer funds from a 401k to a self-directed IRA. All lender and IRA custodian contacts are available upon request. So one of the ways that you make money in real estate, whether it's wholesaling or bringing on a partner or anything like that, is by being the information broker, being the one who has all the contacts. How do you have all the contacts? You make all the contacts. You're the one that has all the information. So for those of you who continue to be plugged into our trainings and stuff, you're smart to do that and to build your teams because you become more valuable to other people out there, other investors who aren't investing in their knowledge. They're not spending the time to get on these classes. They know they want to do it, but they have no idea how. And you're spending the time to get in there and learn the process. So if you know an IRA custodian and you know how to help someone move money from a 401k to an IRA because you watched a class on it or watched the interview we did on it, that's valuable because that's something you can pass along to a potential buyer to help them close on your deal. All right. So, I think I have that. I think I have it in there. Okay, there we go. I was gonna have that same slide in there twice. Okay, so the other trainings that we have that I was referencing before, if you guys haven't taken them, you should. These are the three: the 4 steps to cash flow, remote investing, and the BRRRR strategy. So this might seem a little bit weird, but the way you can get them, if you text into our business cell phone number, which is the one on the screen, 619-373-8461. If you text the words or the letters 4 steps to that number, I set it up so that it will automatically send you a link back to our 4 steps to cash flow webinar. Now it's actually a webinar, then you register for it, and but it happens multiple times. So anyway, that's a really good one to get into. That's a super foundational one. Remote investing, I'd already used the word remote for something else, so I had to come up with something creative. So if you text TV, TV remote, and I have it set up to send you a link to the remote investing training, and that's going to be, I think it's hosted on YouTube right now. Eventually I'll have it in webinar style too, but for now it's on YouTube. And then if you want a copy of the BRRRR strategy training, then you're going to text the word freeze to that number. And if you haven't seen any of them, it's 100% okay. This is information that we have provided for you for free to lay the foundation so that for those of you who do decide to come into our mastermind, you have some kind of context for what you're about to learn. So we really believe in educating people and helping them get a leg up and get started. And this is one of the ways. So if you don't have any of those classes, haven't seen them, you can text all 3 of those in. It will send you the link for all of them. Or if you just haven't seen the remote one, just send TV. That's totally fine. So I hope that helps.